Ladies and gentlemen, President Donald Trump has increased the tariffs from a 10% to now a 15%. Who's going to win? Who's going to lose? What will happen to the stock market? What will happen to Singapore and Malaysia? Today, I'll walk you through all this analysis, and most importantly, towards the end of it, we'll talk about the stock market impact. So over the weekend has been quite exciting. The Supreme Court of US first hit Donald Trump with a punch in his face and telling him that all his tariffs that has been imposed under a special ruling called the IEEPA has been deemed illegal. As a result, they are all off the table. Donald Trump, in a fit of anger, uses another rule and now put a 10% tariffs globally, flat rate across the world. And in a fit of anger, he increases it to 15%, and there's a lot of implications throughout the whole world. Let's analyze this, shall we? It's a 72 hours chaos. It started on Friday. Then after Supreme Court rules with a 6-3 ruling that his tariffs are illegal, about a few hours later, Trump invoked the Section 122 Trade Act of 1974, put a 10% tariff. And I think it has been triggered by some celebration by some of the trade partners and maybe some of his opponents. He escalates it now to 15% on Saturday. And basically, just call names to a lot of people, especially judges. And right now, we are looking at possibly some impact to the stock market. The futures market is really reacting, but let's take a look at it. Most important thing is to understand after Trump's tariff under the IEEPA, which hits a massive tariff across the world, now it's been removed. What is the new rules that's now in place? Is under Section 122, 15% maximum tariff, and he quickly escalated to 15%. 150 days limitations only. You cannot impose for more than 150 days, and he quickly sets that. And must be non-discriminatory, so all countries across the world will kena and has kenaded, which have been hit across the whole world. And if you want to extend it beyond 150 days, you need Congress approval. And Congress approval is not easy to get. So this is essentially what it is today. Let's quick recall. That's the court has basically said that tariffs are taxes and only Congress can meddle with taxes. So $170 billion has been collected right now. It's going to be a big chaos and question mark. How are they going to be refunded? Do you need to be refunded? So in a fit of anger, right, Donald Trump basically said, Limpe is going to increase the tariff to now 15% across all countries, okay, effective 24th of February. And guess what? Tuesday, tomorrow is going to be impacted. There are some exemption, critical minerals, pharmaceutical, metals, and steel and aluminum and autos, they are excluded. And they have already started launching into the Section 301 investigation. You must build a case for Section 301 so that they can have more targeted, more high-impact tariffs before you can launch them. So all these are now in place. More important is Donald Trump is really very angry, but his power has been chipped. So his arsenal is now limited to Section 301. It's a targeted tariff. There is no cap to it, but you need investigation to happen, and it will take 2 to 3 months, and you have to prove your case first. Then under Section 232, there's a Trade Expansion Act where national security tariffs have been already been imposed. Steel and aluminum has been used on this, and they started with 12 new investigation. So once the investigation is done and approved, they can then impose the tariff. And there are other venues as well. There's a Section 338. It allows up to 50% tariff against countries that are discriminating against U.S. commerce, but it's never been used before. So it could be used, but it's never been used, so it could be challenged legally. If the Congress actually passed a new tariff act, then of course things could happen uncontrollably. But I don't think so. I don't think so. So in short, right now the tariff is now 15% globally. So before we all start whining and getting upset, there are a lot of winners from this 15% tariff. China is the big one. China was facing 34 to 50% tariff under the IEEPA, the one that Donald Trump has invoked. So right now, it's now reduced to 15%. So the export competitiveness is now restored. 15%, it's probably very mild from what they are used to. So it's a huge win for China. India also have a big win. So tariff were around 25% or even more. Now it's now 15%. Huge relief for Indian exporters. And these two countries are the biggest exporter to China. And therefore, American consumers are enjoying it now. ASEAN manufacturers, be it Vietnam, Thailand, Indonesia, who used to face a range of production, exporting taxes, and right now they now face only 15%. So I think they're all benefiting tremendously as well. So all in all, this is good news for the US consumer because there's now lower import costs and potentially some refunds will come to who knows which company will enjoy it, and potentially they could return it back to consumer in lower prices. But there are losers from this tariff reset as well. UK, Singapore, 10%, now elevated to 15%. And it's important to take note of this. UK has negotiated some terms with US to get that preferential 10%. Now they got elevated to 15%, and basically it's a flat tariff. So actually, in some sense, UK don't need to give in anything. They will get that 15% anyway. Interestingly, Japan and South Korea mainly at 15%, but they have made a lot of commitments to Donald Trump to pour in hundreds of billions of dollars to investment into US to secure the 15%. But everybody also get 15% now. So maybe they don't need to give in to Donald Trump anymore since it's 15% flat rate to everybody. So there are a lot of bilateral agreements that are now being signed up with a few countries to enjoy 15%, but those 15% are all gone. They're all, to get below 15%. So now, you have to take on the higher rate at 15% and it's flat throughout the whole world. So a lot of people must be banging that, I actually shouldn't need to give in to Donald Trump. So in short, Donald Trump negotiation leverage has now been reduced and his power has now been chipped and he doesn't like it. And of course, people has been disadvantaged also doesn't like it. So Singapore, I'll talk about it later as well. This is a big blow to many of the countries that have give in to Donald Trump in order to enjoy preferential rates. Interestingly, a lot of people are asking, why are the stock market futures only down mildly, right? At a point where I checked it, it was about 0.3, and I think you will get even lesser. So the market is going down, but not by much. Why? Because inherently, this is good news. It's not really a bad news. The adjustment from 10 to 15 is bad news, but at 15, it's still not bad. It's still not bad because if you look at it, the main one is China. China's cost has been lowered. So consumers are now enjoying a higher level of discount. So that's great. So therefore, the impact to the stock market is not going to be a lot. And I won't be surprised even suddenly turn positive today. So it's hard to say because the investors or the analysts are less concerned about that 10-15% tariff, are more concerned about uncertainty, volatility, unpredictable mood of Trump and what other things he could do. So this is probably the things that can cause some unrest out of this incident. And of course, we have other matters, the Iran-US negotiation right now that's happening, and US lining up aircraft carriers and ready to attack Iran if they don't come to an agreement. And of course, we have also got a weakening US GDP data and possibly is a markup inflation level. So all these other things could potentially have a bigger impact than this tariff news. For corporate America, consumer America, the key thing is this: 15% flat tariff simply means that the retail consumer who has previously suffered from high import tariffs, weighted average 20 to 25%, now will get it at 15% or slightly above on a weighted average. So that's good. Industries generally are all benefiting from it. So I think as a whole, I think it's good news. So what are the paths forward? Well, I talked about it briefly last week. And I want to say this with a new flavor because now 15%. So the bullish case is that Section 122, which Donald Trump has used to increase it to 15%, it expires in July after 150 days, and the Congress doesn't allow him to extend it. And all the other sections that he used to now levy tariffs are either not approved or have mild impact, okay, because of the limited nature of this tariff. As a result, basically this tariff war is now coming down to a mild level or almost gone. I think the S&P would have a strong bullish reaction, taking all the other things constant. That means we call it ceteris paribus in economics, which basically says that no, assuming the rest of the world, all the events are mild and constant, just this itself, yes, it will have a positive impact on the stock market. Base case is the 15% will hold for 150 days. And after that, Trump is going to get his way and hit China and India with a 301 tariffs, and that could weigh pretty heavily. So, you take away some, you give some, and things like that. At the end of it is almost business as usual. So, again, taking away all other effects is basically business as usual, all the way possibly a mildly bullish market, because it's still better than before. Now, there is a small chance that this turns out to be a bear market in the following scenario. Somehow, Donald Trump managed to impose the Section 122 15% tariff after 150 days. We call this looping. That means every 150 days he imposed, every 150 days he imposed. And the Congress now aligns with Donald Trump, okay, and give him all the power he needs to impose all this tariff. And all the other sections are being used to impose more tariff above 15%. This kind of thing will be more deadly and painful, okay? That could bring the stock market down by 5 to 10%. So that could happen, but I think the chance of that happening is low, but not no. Let's specifically talk about Singapore. Singapore tariffs has been increased from 10 to 15%. Deputy Prime Minister Gan Kim Yong makes some comments. He basically says that Singapore will, in all likelihood, face the new 15%. Of course, you can avoid it. It's a flat rate across the world. But if applied across the board, it won't affect our relative competitiveness because everybody kena, all right? And all the budget measures that's approved or at least being presented by the Prime Minister, I think will be enough to deal with the whole challenge. But however, right, 15% is higher than 10%. There will be some impact. The full impact is hard to say. Malaysia, interestingly, is a beneficiary. Their tariffs previously was at 19%. Now, 15%. The question is, there was an agreement signed in October last year between Donald Trump and Prime Minister Anwar, and it is a bilateral agreement that allows some products to be zero tariff and most of the rest are 19%. Does this mean that that deal is over and they just take a flat rate of 15%? hard to say. I think Malaysia could potentially be the beneficiary of this 15%. So it's hard to say because I don't know the detail. What is a zero? Is those more important? So is 0 and 19 better than flat rate 15? Right? That's the key question. So amidst all this, for the investors, what should we do? Well, there could be a few scenarios here and there. I don't think that this is going to be a big stock market mover, this news. So I will just do a watch and see. It's difficult to predict the outcomes, but nevertheless, I'll prepare dry powder. We know closer to 150 days, there will have to be an update to this outcome. So from now to 150 days, we know something will happen. What will happen, we don't know. And then we shall see whether there'll be an impact. So let's watch and see. And meanwhile, there are other factors that are now potentially affecting the stock market as well. I've talked about it. Let those things play out. I would just watch and see and really go in if the market do react negatively in a big way. So bottom line is, right now, we stay disciplined. There's no need to overreact in this kind of situation. Whatever we have in our globally diversified portfolio, stay put and let it compound. I don't need to pull out. I don't need to put in at this point in time until we have better clarity on the direction where the market is. Okay? Well, I'll try to see whether tonight I can do a update of this in a live stream because the stock market will go live tonight. Let's watch and see, shall we? Thank you for watching, and I'll see you tonight. Bye-bye.